Paul, what do you think about the data set? Now we have PPI, we have CPI, we have the UMich inflation expectations that were even weaker than expected on the 5 to 10 year outlook. If you were at the Fed, what would you make of it?
I think the disinflationary process is very intact and durable, but we still are a long way from where the Fed wants to be. So I think the bottom line is that monetary policy is in a good place. It's restricting, inflation's coming down, but it's too early to declare that they are sufficiently restrictive, that they're in a good place, but they also want to be on the side of saying we're going to be late, not early, in declaring victory.
Yeah, I mean, the market thinks they've been sufficiently restrictive, Steve, but we'll get a jobs report and a CPI report for August before the September meeting, and before that, we'll get Jackson Hole. So how's it all looking to you as far as the communication and policy?
Well, I want to make a short-term comment, Sarah, which is we may be in the middle of the dumbest bond market sell-off right now I've ever seen. You guys were pointing out this portfolio management service number, which has been the thing that really created the upside surprise on the PPI. So what I did is I just took it out, and guess what? PPI comes in exactly as expected. And then I just ran a correlation. Mike Santoli brought this up. I just did a correlation between the year-over-year change in the S&P and this portfolio management service series. It has an 87% R squared, which is exactly what you guys were talking about. As assets under management goes up, the fees people pay. So just to be clear, that's not inflation. And the market, now the bond market may have other reasons for selling off, but if it's selling off because of this portfolio management thing, it's kind of silly. And then I think, Sarah, you made a great point, which is it seems like it's offset and maybe equally so from the Fed's point of view by this decline in both the 5 to 10 year inflation outlook in the Michigan sentiment numbers and the 1 year outlook, which is what they're trying to do. So I'm getting this feeling that there's an ingrained disinflationary process in the economy. Certainly like to hear more data. And I think Daly would change her opinion in a minute if there were 1 or 2 more reports like we've had the last couple of months.
Yeah, but you can always take something out. Inflation basically is flat if you include the lagged shelter impact, for instance, of CPI, the rent data in the CPI.
But I'm not talking about just taking anything out. I'm taking out something that is A, not inflation, and B, was up 7.6% month over month. I don't want to be cavalier about it, but I think this one is probably makes some sense to take it out.
Yeah, I mean, that does make sense, Steve, but it is such a transparent factor that, in theory, it should have been in the estimates too, because you could just do the math on the S&P. I guess to me, Paul, what the little sell-off we've gotten today in bonds might tell us is, and even if it is responding to kind of this fleeting factor, it does have information in there about what the market is on edge about, and it is this sort of two-sided story about, you have some folks at the Fed who are starting to talk about the risks of over-tightening at this level, and we've done enough, and we should hold rates here, and we already are kind of restrictive in real terms, and others who are essentially saying, like, we wanted more than we got already in terms of rate hikes, and we have to get there. So how do we navigate that debate?
I think you're very right, Mike. We are very much in the end game of the tightening process. And the end game is when risk becomes two-sided. And effectively, all of the FOMC is saying we're in the end game and it's two-sided risk. And then you have essentially a camp that wants to say, let's think in terms of let's do enough. And then the other is saying, wait a minute, we probably have done enough. So I think it's really characteristic of the end game nature of the monetary tightening process. And I think that informs what Chair Powell will be saying at Jackson Hole, is that I think he'll say we're in a great place. We're in the end game, but we'll point out that there's still two-sided risk and is going to leave out the possibility, I think, of more hikes. They have it in the dot plot. I don't think they will do it in September, but they want the marketplace to still have fear of another hike.